Welcome, my name is Thomas Ledford, and I'm here to share in this video the Schedule C for 2018, and we're just going to go through the front and back page of the Schedule C, covering the majority of the line items to give you a clear picture and clarity of what should go on certain lines. So if you're new to the industry and you're just getting started and you really haven't had a whole lot of income tax preparation training, get a chance to utilize my channel, which is called The World of Tax Preparation, which is based on my 18 years of experience and training, the last 12 as a tax preparation service, and leveraging my coaching and training program that I have. If you need so, definitely reach out to me and with my contact information inside any one of my videos. The tax reform and what's going forward as far as the Schedule C this year, for most people, it's not going to too much really make a big difference, especially for people who only claim a certain dollar amount on their tax return as far as self-employment income in the first place. The only big difference is going to really play a role in is for people who truly making a considerable amount of income inside of their business, who may be able to qualify from the may qualify for the qualified business income deduction that we have going forward this year and beyond, is the real big difference going on. And so with the changes with the tax reform, you really want to do your due diligence and research and go through the material best you can. Check out many webinars of tax professionals that's going through the qualified business income deduction section of the new tax reform as best you can, so you have a better understanding of what's going on, along with the fact that yes, the software can assist you and help you with the calculation portion of the return, but you must know where to put the information inside the return to get the proper calculations in the first place. Getting started, of course, the name of the proprietor will be you and your social security number. Line A is the principal business or profession. You would put that on line A. Next to it is line B. It has a code. We have a code system that we use in this country to categorize our businesses. And so a lot of software will give you an option to show you a list of the different codes, and you want to select the one that closely relates to your profession or principal business that you're doing. Line C is business name. So if you're using a business name other than your own, or a combination of your, or using a combination of your name, you know, like I'm using Thomas G Ledford and Associates. That's my name. The Associates, I'm incorporated. So I wouldn't use a Schedule C at all. I'll go on a corporation form or S Corp, depending on if I made the election to do so. Line E, business address. So if you got a separate address for business other than where you live, then of course you will have that information there. F, accounting method. Myself personally, I use a Curo method because I just like the advantages of having using the Cure method based on the cash-based method. And the difference between cash-based versus a Cure simply is, for cash-based method, you only can count expenses that you actually paid off on. And when it comes to income, you only can count income that you actually received in your hand. So say, for instance, you are a barber and you cut hair, and say you got 10 clients for the month that you allowed to cut their hair on credit, and say you won't get paid to the following month for those 10, then you couldn't count that income until that month you actually see the cash in your hand. And so that's the big difference between cash versus a Cure method. Cure method would be, even though I gave them 10 people a haircut on credits next month, I can still count that money as income because it's money that is revenue that I produce by providing a service, regardless of me getting the cash after the service. So that's the advantage of a Cure versus cash-based. Line G, did you materially participate in the operation of the business? That's important because for most self-employed and small business owners, we do participate in the success or failure of our business. So we check that as yes. You do have some rare occurrences where you have some people who are owners in name only, where they don't participate in the success or failure of their business. They just the owners of the business, and so the deductions and things of that nature are limited for them. So that's why we must understand the importance of did we materially participate in the activity of the business. Line H said, if you started or acquired the business during 2018, yeah. So if you're new this year, you say yes. You check yes. If you're not, then you just leave that alone. Line I, did you make any payments in 2018 that would be required you to file a Form 299? And that'll be, for instance, if you paid people to do work for you inside of your business other than employees. Say if you hired some freelancers to do a website or do some social media promotion and things of that nature, that could be considered freelance work. They would get a 1099 for the work they performed for you that you'll be able to write off as a business expense for the business. And then we go into part 1, income. So gross receipts and sales. So generally, whatever type of business you did for the year, if you did your books and you realized you made $39,546, that'll go on line 1. Line 2 is returns and allowance. That's basically deal with people who selling retail, who in the retail industry who have an inventory. So if you don't fall into that category, then it won't apply to you. Line 3, you specifically subtract 2 from 1, put it on 3. Cost of goods sold, again, that applies to the people who in retail-based industries who have inventory that they want to leverage. So they'll go to the section that applies to that on the back of the form and fill out that section and put the results on line 4. And then 5, gross profit. So for people who don't fall into that space, line 1, 3, 5, and 7 will be the same number. Now, that's the bottom line. That's the shortcut version of it. Part 2, expenses. So for people who have expenses, advertisement is a common expense that falls under business cards, flyers, anything dealing with marketing related materials that's going to allow you to promote your business and what you do could fall under advertisement. Car and truck expense. So if you got a vehicle directly related to the business, that's a possibility. I'm not going to go through all the expenses because a lot of them won't apply to everybody. Rent expense. So if you have a commercial location, then you definitely have rent expense. Repairs and maintenance. So if you had to, if you're responsible for fixing any issues inside your location yourself, then you would write those off. Taxes and licenses you need for the location. Some office expenses you may have to go get from Office Depot or Home Depot or whatever office supply store you go to. Utilities. If you had any employees, they will go line 26. And if you had other expenses is a section where we would put expenses that was generally not covered in the expense section. And so people who we normally have deal with that section are people who fall into specific niches like barbers and nails techs and people of that nature who don't really have any expenses that would fall into the category. In part 2, we would have put the expenses on the other, where they will be written down line by line on what the expense was and how much you paid. That way the IRS could see what specific expenses you had concerning your business, especially for people who fall into personal service like barbers and nail techs, things like that myself, tax preparation service. With me not using Schedule C, I'll be using a different form where I can use to cover the expenses I would have. But the general idea is whatever expenses you have, you will write those off concerning the business. The next section that we're talking about, like I said, part 3 is for cost of goods sold. So that's for people who fall under retail who has inventory. They would fill that section out. Part 4 is information for vehicles. So like I said, if you got a vehicle that you directly use in the operation of the business, you can, if you plan on using mileage or actual expenses, that information will go right here. And like I said, part 5 was other expenses. And so basically that's the 10/40/2018 overview of the different line items that you would deal with. When it comes to having an EIN number, the IRS recommend that you get an EIN number, which stands for Employee Identification Number, opposed to using your Social Security number. You know what I'm saying? Because it's a recommendation that we let our clients know that we strongly suggest you follow. Because you want to be able to separate your number, Social Security number, from any business you're doing, regardless if it's sole proprietorship versus incorporated. And so that's the recommendation we give all our clients who in business, who don't have all their business credentials set up. So that's one of the things we help people who looking to start a business do, or already claim to be in business but don't have these things done. We help you set up your business credentials, and we walk you through the workflow on the back end of how that should look. And we have those services that you can reach out to us for, and we have flat rate pricing for basically everything we do, because we work with self-employed individuals, small business owners, from all categories, from all income levels. And so we help to meet the needs of entrepreneurs everywhere, regardless of what industry they're in or what revenue stream they producing at this time or not. So in this video, like I said, it covered the Schedule C on some basic stuff. If you need some mentorship and coaching concerning tax preparation and trying to get started and being ready for when February kick in, because February is our peak season. That's when the most income taxes are prepared for the nation, for everybody. After that, going into March, things start to get slow. April, it closes out. We are year-round tax service, so we don't close our doors until October 15th. And that's the difference between a lot of tax services. You got seasonal and you got year-round, based on how many locations a tax service may have. If they got 2 or more, they might have a corporate location that's the year-round location, and then have seasonal locations that close after April, unless it's a location that they designate to be the year-round, and they close the corporate after April, because they basically switching locations and they got people working there maybe 2 or 3 days out the week throughout the remainder of the year, to service any client issues that may come across their desk. And so, again, the world of tax preparation, profit and loss, Schedule C, 2018 form, and I'll see you in my next video.